Hello, I'm David Winship, a principal at Napskinc Insurance Services, and I'm here today with Chaz Bellingrath, a cyber liability specialist with ARC Excess and Surplus. The webinar that Chaz will be presenting today is on the evolving liabilities of cyber, privacy and security, and the insurance products out in the marketplace. Who we are. Napskinc Insurance Services, founded in 1921, is a large regional property and casualty retail insurance agency located in Boston, Mass., with a branch office in Braintree, Massachusetts. We are a full-service organization with over 30 employees and 3,400 customers. ARC Excess and Surplus LLC is the largest privately held professional and management liability brokerage in the United States with over $600 million in gross written premium. ARC has been specializing in cyber since it was first introduced in the late 1990s.
David, one thing that we talk to all of our clients about are cyber privacy and security exposures, and the big question is your organization prepared? Last year, the average organizational cost of a data breach in 2013 was $5.4 million, affecting millions of people across the globe. We work with a lot of studies, and a recent study by the Secret Service and Verizon revealed that 72% of all data breaches occurred in small businesses.
Chaz, I just think that is a great point to hammer home that obviously the Targets, the TJXs, the Neiman Marcuses of the world get the press just because of the sheer overall magnitude of it all, but the vast majority of data breaches occur in small business.
We also work with a lot of claim studies, and a recent study done by Net Diligence found that the average cost of legal defense for a data breach was $582,000, and the average cost of a settlement was over $2 million. Let's look now at the cyber risk exposures.
Chaz, with so much in the news today about cyber attacks, our clients want to discuss what is their cyber risk and what are the insurance products out there. Businesses obviously depend on data and technology, but these days it seems to be coming at a high price. A day just doesn't go by without some press release regarding a security breach or a cyber attack.
David, this is a great question, and what a lot of our clients don't realize is what their cyber risk is and the coverages available in the marketplace. You can really divvy this up into first and third party coverages. The first party coverages, really the bulk of it, are the cost to notify affected individuals impacted by a security breach. What a lot of people don't realize is that you need to respond to these security breaches in a timely manner and let the affected individuals know that a breach occurred. In addition to first party claims, we're also seeing third party liability claims. Failure to maintain security and negligence are the most common claims we see, in addition to regulatory actions, fines and penalties. This would come from HIPAA violations as well as investigations from attorneys general. In addition, we see that legal defense and damages are always increasing. Additional claims would be violation of privacy and invasion of customers' right to privacy. This would also include unauthorized access of sensitive information in paper or electronic format. Employee information, customer information. This is really broken down into two groups, which would include name, address, social security number, credit card information, account numbers, personal health, and personal identifiable information. Additional exposures are business income, cyber extortion, and crisis management expense. When we talk about cyber privacy and security exposures, we really hone in on information and who, what, and where this information rests. Who has access to this information, and what are they accessing? Obviously, we hear about the bad actors, like hackers, accessing point-of-sale systems through viruses and other forms of malware. In addition, we don't think about employees, faculties, and students that could potentially have access to our information. We also contract with third-party service providers to store our information on our behalf. So what are they accessing? A lot of the claims that we are seeing are negligence claims specific to mobile devices like laptops and cell phones. As we all work in our businesses today, we have information on the go. A recent claim that we handled in our office was a lost laptop. The scenario was that a employee of a corporation went to go get their morning coffee. Within 5 minutes they came back and their laptop was stolen out of the back seat of their car. So what else is at risk? Computer networks? Wireless networks? How many of your companies have a wireless network that doesn't have a password? Maybe you should. In addition, when we talk about cyber risk, we always think about electronic information. But we really need to also think about paper information, especially as we're all moving to a paperless environment. In addition, we have websites and cloud services that we perform. Even our own home web page could have access to personal information. We all are moving to a cloud environment as well, and little do we know that that cloud service provider could have access to all of our corporate information.
Chaz, we've talked about the exposures such as the liabilities involved, but let's drill down a bit more on the first party notification, the obligation to be in compliance. This isn't a gray area. These are requirements and these are laws.
So David, let's talk about the Massachusetts data security laws, because I think that's really the most important, and a lot of people don't realize that they are actually one of the most strict data security laws in all 46 states that require notification obligation when a security breach occurs. The objective of the Massachusetts data security laws is to ensure the security and confidentiality of customer information and to protect against threats of unauthorized access to such information that may result in harm. The first law came in effect in October 2007, which is the Mass Data Breach Law, and requires companies to notify affected residents as soon as practicable and without unreasonable delay when the entity knows or has reason to know of a security breach. You can visit the specifics of this law at the link below. 3 years later, in March, Mass law required that companies who store or used personal information about Massachusetts residents required them to develop and maintain a written information security policy, or a WISP. You can also visit this law at the link below.
Chaz, obviously the recent claims list is voluminous and we've heard of the marquee ones, but let's just touch on a few that maybe we haven't heard of recently.
Great point, David. One thing that we're working with all of our clients is really educating them on recent security breaches. 3 are detailed here. The first is the Breyer Group, local right here in Boston, but they run in eight restaurants, and they just agreed to pay a $110,000 penalty after a lawsuit was filed by the state's Attorney General alleging failure to protect customers' credit card information. We're also seeing a lot of claims with higher education, and recently with the University of Maryland, they had a security breach that affected just over 300,000 people. This could cost them millions. One other industry we're starting to see a lot of security incidents is with municipalities. And another local breach right in Rockland, where social security numbers and bank account information were lost when wind knocked them off a recycling truck. At least 200 current and former employees of Rockland's government between 1992 and 2002 were affected. Another security incident that I'd like to add, which I'm personally handling, is a security incident that happened with a local nonprofit. This local nonprofit has been around for a long time and had a long-term employee who recently was not promoted and acted roguely and wrongfully disposed of confidential information in the dumpster. That dumpster was later disposed, and they had to notify close to 1,000 individuals from the security incident.
Chaz, we've talked about exposures, risks, and the cyber product, but let's spend some time discussing why these exposures are not covered by traditional insurance, why they're not triggered, and now where they're specifically excluded.
David, this is a great point, and we work with all of our clients on these specific exposures. And a lot of our clients will come to us and say, you know, Chaz and David, why doesn't our property or why doesn't our crime policy cover this? And the answer is property policies only respond to the loss or damage to tangible property, and they exclude indirect or consequential loss. When we automatically think about hackers, a lot of people think about hacking into an account and accessing information and money. But to be clear and concise here, crime covers money and securities, and cyber policies cover information. Remember also that property and crime policies do not have a first-party component, which would allow for the coverage for the notification, the offering of the credit monitoring. In addition to exclusions on property and crime policies, we're also seeing exclusions on liability insurance policies. The new ISO form actually has a specific exclusion for network security and breach incidents. Traditional liability policies respond only to loss from a defined professional services or defined act or offenses. This would be a specific professional liability policy. They also respond for physical injuries to the body, i.e. mental anguish or bodily injury property damage. They also exclude losses that occur outside of the United States, while many hacking incidents occur internationally.
Chaz, we put together some questions that we often get from our clients here at NAPSCANC. The first one, hopefully if you've been listening to what preceded, we know the answer, but I'll let you touch upon it.
David, and surprisingly we get a lot of pushback on this question. You know, companies are spending a lot of money in IT departments and firewalls and the best security out there. So why do we need the coverage? Well, we talked about the exposures, and unfortunately, although IT security systems are getting better and better, no IT security system is 100% safe.
This next question derives from what I feel is the biggest misconception out there. We utilize a third-party vendor to gather and store personal information. Doesn't that protect us from liability?
And you're right, David, this does come up a lot. A lot of people think that it does protect their liability, but it limits it in some way, shape, or form. But what they don't realize is the way the data security laws work is that they are required to provide the notification and offer the credit monitoring, whether it happens at your company level or at the third-party service provider level. To add to that, it's really important to make sure that your vendors are carrying the right coverage specific to professional and cyber liability, because what we're seeing is that when a breach does occur at the third-party vendor level, our client is required to provide the notification, offer the credit monitoring, which could suffer an insured from a financial loss. Later down the line, we are starting to see a lot of subrogation suits against that third-party vendor. So it's important to protect yourself and make sure that they're carrying the right coverage.
Does cyber liability only cover electronic data? We know the answer to that. No, it's not only for electronic data. Obviously, the next question gets asked right off the bat. How much does cyber liability cost?
Let's take a step back and really figure out how this is underwritten first, so that way you can get a sense of what the cost would be. There's really four main components. The first being the revenue. Second, class of business. Third, your policies and procedures. And lastly, your claims. Cyber liability premiums are definitely driving downward. We are seeing minimum premiums as low as $1,000 for small businesses under $1 million in revenue. Premiums can get as high as 6 figures depending on the limit and exposure at hand. That brings us to our next question, is what is the right limit of insurance to buy? Well, that's one thing that I, as well as the team at NAPSCANC, will work with you with. We're not just going to provide you with 5 different limit options, we're going to make a recommendation. It is important to identify the exposures and talk about the cyber risk and catastrophic risk at hand, and then assign the appropriate limit to your insurance.
Chaz, you just stated that the present market is a soft market for cyber risk. More demand means more capacity, which keeps pricing stable. But frequency and severity certainly seem to be on the rise. Can you extrapolate a bit further as to where you see the market? Is it like employment practices, which seems to be increasing in premium, or do you see it stable in the near term?
You're right, David. More demand does mean more capacity. In today's market, we're working with roughly 50 to 70 different insurance carriers on this cyber risk exposure. Where I see the market going, I'd really like to divide it into two parts. For the small and middle market, I definitely see premiums going down, underwriters are requiring less information, and policies are getting more robust. Like I mentioned earlier, minimum premiums are as low as $1,000, but can be as high as six figures. With the larger accounts, specific to retail and healthcare, with the amount of claims activity we're seeing in that space, that's definitely getting a little tougher. So for the small and middle market, the marketplace is getting a little easier. However, on the larger accounts, it is definitely getting a little bit more tough, and underwriters are requiring a lot of information, including conference calls with IT.
Thank you, Chaz, for being with us today and for your efforts. And thank you, listeners, for your time. We hope that you found the presentation worthwhile, informative, and helpful. And obviously, contact information is on this last slide. Thank you again.